Did you know your credit score isn't just about how much debt you have? Let's dive into the mystery behind those three-digit numbers that rule so much of your financial life. Your credit score is a complex mix of 5 key areas: payment history, amounts owed, length of credit history, new credit, and types of credit used. The biggest piece? Your payment history. It makes up about 35% of your score. This means paying bills on time is more important than how much you owe. Imagine your credit score as a recipe. Payment history is like the main ingredient, but every part matters to balance it out. Many people think maxing out their credit cards improves their scores, but that's a myth. High credit utilization can actually hurt your score by 10% or more. Credit history length impacts 15% of your score. Older accounts, when managed well, show consistency and trustworthiness in the eyes of lenders. Opening new credit lines can temporarily lower your score by about 5%, but this is a small dip for potentially better terms or rates later on. So, understanding how these pieces fit together isn't just academic. It can save you hundreds of dollars each year by helping you negotiate better interest rates and avoid fees. Remember, while we've covered a lot, your credit score is just one piece of the broader financial puzzle. Always consult personalized advice for your specific situation. Subscribe to Money Mechanics and uncover more hidden mechanics behind money that can change your life for the better.